Hello everyone, welcome to Money Nook. In this video, let's talk about basics of income tax. Whenever we are talking about tax, we come across terms such as gross income, taxable income, tax rate, tax slab, etc. Right? So in this video, let's discuss about each of these terms and let's also see how we should calculate our income tax step by step. Before talking about tax, taxable income and other things, first let's talk about income, which is the starting point. As you can see on the screen, various sources of income like salary, rent, etc. are mentioned. Let's say in your particular case, you are working. Then your company will pay you salary every month. Similarly, they will also deposit some amount of money in your EPF and any other mandatory savings accounts that you have opted for like VPF, NPS, etc. They'll also deduct some tax from your total pay and they'll pay it to the income tax department. This is nothing but the TDS, tax deducted at source. So the total of these three components is the income that you are receiving from your company. I repeat again, though you are not receiving either your EPF amount or your TDS in your hand, it is still your income as your company is either depositing it somewhere or paying it to someone on your behalf. Now moving on, you might also have some other sources of income like you might earn rent out of a property that you own, or you might be getting some dividend on your shares, you might be getting interest from your savings bank or fixed deposits, etc. Similarly, if you own a property or if you own some shares and if you have sold them this financial year and gained profit out of them, then you will also have income from this sale. This is known as capital gains. So when you combine and add the income from all these different sources, that is known as your gross total income. Now that you know your gross total income, will you pay tax on it? Definitely not, because government has provided us with some tax exemptions in order to reduce our tax liability. These are known as deductions and allowances. For example, you have house rent allowance, you have section 80C deduction, etc. So you can claim tax exemption under these deductions and allowances and reduce your tax liability. Once you claim these deductions and allowances, your total taxable income will be known. This total taxable income will be different for different people. It can be 3 lakhs, 5 lakhs, 10 lakhs, 50 lakhs, anything. So will everyone pay the same amount of tax? Definitely not. Based on your total taxable income, you will be part of a tax slab, and based on that your tax rate is determined. For example, let's say if you are earning 10 lakhs, then your tax rate might be 10%. I'm just saying this as an example. We can check out the tax slabs and tax rates in the next slide. So based on your income level, your tax rate is determined. This happens on your personal income. But in case of, let's say, capital gains, here irrespective of how much you have earned, be it 10 lakhs, 20 lakhs, 30 lakhs, your tax rate is fixed. It will be, let's say, if you have earned it by selling property, then it will be straight away 20%. So now based upon your total taxable income and the type of income that you will have, you will know your tax rate, and from that you will be able to calculate the total tax and cess that you need to pay. Once you know the tax and cess that you need to pay the government, from this amount you should subtract the tax that is already paid as TDS. Then you will get to know the final tax that needs to be paid by you to the government or the government needs to refund to you. In this way you can calculate your tax and cess liability and the final amount that needs to be paid or refunded. Now let's have a look at the different tax slabs and tax rates that we have. In the first table you can check out the tax rate that is applicable for different tax slabs based upon your taxable income. Let's say your taxable income is 7 lakhs. Then you will fall under rupees 5 lakhs to 7.5 lakhs tax slab. Under this tax slab, you can check out the applicable tax rate based upon the regime that you are following, old regime or new regime, and your age as well. I have uploaded a separate video about old regime versus new regime and how you can decide which is better for your particular case. You can check out the video in the same series on my channel. Moving on, you can also see the example of capital gains where the tax rate is fixed. Let's say you have capital gains on your property sale, then the tax rate is 20%. If it is on shares, then it is 10% with an exemption of profits up to rupees 1 lakh. Now that we understand the basic flow of taxation in India, right from earning money till we pay tax, as well as different tax rates that are applicable, let's have a look with an example. First, let's see how to calculate the tax that needs to be paid if taxable income is given. Let's say for a person aged 30 years, the taxable income is 6 lakhs. Then let's see the tax that needs to be paid under both old regime and new regime. Under old regime, as you can see, for 0 to 2.5 lakhs, the tax that needs to be paid is nil. So it is 0. Now moving on to 2.5 lakhs to 3 lakhs and 3 to 5 lakhs. In both the tax slabs, the tax that needs to be paid is 5%, but there is a rebate that is provided under Section 87A. But that rebate is applicable only if the total taxable income is under 5 lakhs. Since this person has a taxable income of 6 lakhs, this is not applicable and this person needs to pay tax at 5% for up to 5 lakhs. So here for an amount of 2.5 lakhs. Since up to 2.5 lakhs there is no tax, for the remaining 2.5 lakhs we are calculating the tax at 5% as given. At 5% it is 12,500. Now moving on to next tax slab, rupees 5 lakhs to 7.5 lakhs. So this person is earning 6 lakhs. So under this tax slab, the income that is present is only 1 lakh because 6 lakhs minus 5 lakhs is 1 lakh. So we need to pay tax on this 1 lakh rupees at 20%, which is the given rate of interest. So at 20%, this becomes 20,000. Now there is nothing above 7.5 lakhs that need to consider because this person is earning only 6 lakhs. So now the total tax that we need to pay is the total of all of this put together, which is nothing but 32,500. Now let's check out the tax calculation for the new regime as well. In the new regime, again for up to 0 to 2.5 lakhs, no tax needs to be paid. So it is again 0. And for up to 5 lakhs, again it is 5% rebate if the income is below 5 lakhs. Since that is not applicable here as well, the tax that needs to be paid is 12,500. Now moving on to the next tax slab, which is 5 lakhs to 7.5 lakhs. Again, the income that is present under this tax slab is only 1 lakh, but the tax rate here is only 10% under the new regime. So under the new regime, it is 1 lakh rupees into 10%. It is 10,000. Above 7.5 lakhs, there is no tax that needs to be paid since the person's income is below 7.5. So now the total tax that needs to be paid in the new regime is 22,500. In this way, if a taxable income of a person and the age of a person is given, you can calculate income tax in both old regime and new regime as well. This is only the tax amount. The cess amount needs to be calculated again, which is 4% above this. So the cess amount in both the cases is calculated as well. Now moving on, let's see an example for long-term capital gains as well, which is a fixed rate tax. Let's say you have sold shares worth 10 lakhs. Exemption is provided up to 1 lakh and tax rate is 10%. So now on the amount which is above 1 lakh, which becomes 9 lakhs, you need to pay a tax of 10%, which is equals to 90,000. In this way, you can calculate the tax that you need to pay for capital gains as well. Now let's have a look at a detailed example for a person who is about to file taxes for a financial year. As you can see, the enhanced salary is 5,50,000. The EPF which the company deposited is 50,000 and the tax that the company deposited is 25,000. Similarly, the person is also earning a bank interest of 10,000. So the gross income for the person is 6 lakhs 35,000 rupees. Now let's look at the deductions that are being claimed. The person is claiming a standard salary deduction of 50,000 as well as 25,000 under Section 80C. So the total deductions that are claimed are 75,000. Again, a note here, these deductions that you see on the screen are only applicable in old regime. As I have said earlier as well, I have uploaded a separate video about old regime versus new regime. You can check out in detail about the differences and how that will impact your tax in that video. Now moving on, Here there is a calculator which I have embedded in this Excel sheet, which will automatically calculate the tax that is payable under both old and new regime for this person based upon the total income details that the person has given, as well as the exemptions that are being claimed. Based on those details, the calculator has recommended the old regime for this particular person. As you can see that the total tax that needs to be paid under old regime is lesser than the new regime. Now let's have a look at the summary. Gross income is 6,35,000. The deductions and allowances that we have shown here are 75,000. So the total taxable income is 5,60,000 in this particular case, and the tax and cess that the person needs to pay is 25,480. This is calculated in the same way as we have seen earlier in this particular tab based on the tax slabs and the tax rates that are applicable. So now the total tax and cess that needs to be paid is 25,480, of which 25,000 is already paid by the company as tax deducted at source throughout the financial year. So if we subtract this 25,000, the person needs to pay only 480 rupees to the government. This is the remaining tax that needs to be paid. Let's say if the tax deducted at source is 30,000 by the company, then in that case the person will receive a refund of 3,480 from the government. In this way, starting from your income and then noting down your deductions, allowances, and tax exemptions, you can calculate your own tax liability as well as tax that needs to be finally paid or the refund that you need to receive. I hope now you are very clear about the terms that you come across when you are filing your own income tax. If you find the content in this video useful, please like this video and share it with your friends. Also, please subscribe to Money Nook. Thank you and bye-bye.